Dan, let's start with Microsoft. Did you ever think we'd see a number like 47% and this market would consider it a disappointment?
Exactly. I mean, it just shows where we are. I mean, you're talking about a stock that's up 50% since March. That's an eye-popping number, and I think any knee-jerk reaction negative will be short-lived. This is a stock, I think, 24 hours from now or even next week's higher. A massive print from Microsoft, strong guidance, cloud story is just resonating massively in Redmond.
Dan, there's always someone trying to build a bearish narrative on something that has moved as quickly as Microsoft through 2020. The story I've heard this morning, you've heard it too, comes down to market share. Any reason to be worried about that?
I think to some extent from market share, they're gaining more and more steam versus AWS and Amazon. Right now, this is in Microsoft's backyard in terms of cloud on the enterprise. You're seeing that in terms of the Azure strength in Office 365 as well as the guidance. That's why I think the cloud transformation story, it's a re-rating story that Nadella is driving there. And I think this is a stock, we've talked 260 price target, 300 bull case. I think we're only halfway through the re-rating of Microsoft.
I mentioned this earlier this morning. I'd love your view on it, Dan. Satya Nadella in the previous quarter said the following: we've seen 2 years worth of digital transformation in 2 months. As an analyst, are you finding it difficult to keep up with what is happening at some of these large companies?
It's in 20-plus years covering tech stocks. It's unlike anything I've ever seen. I mean, I'm seeing 20, 30% of the deals accelerated by 2.5 years. And I think that's why it's not just work-from-home names, cloud, overall tech. There's a lack of secular growth stories. So many of them are in tech and cloud, and that's why I think tech names, FANG names go another 20, 30% higher, even on some of these knee-jerk negative reactions, very similar as you've seen throughout with Netflix and I think Microsoft as well.
Well, Dan, we're rebasing the appropriate multiple for a company like this. Given where real yields are in the bond market, where credit spreads are, people are willing to pay up for reliable cash flows, revenue, profits, a sustainable management team that is just driving huge growth. They're willing to pay up for that. I think the conversation, though, Dan, is what is the appropriate multiple on the dollar of those earnings over at a company like Microsoft?
Yeah, and I think that's sort of the debate I hear from investors. And I think with a name like Microsoft, you almost have to, like a lot of these stories, view more sum of the parts. I think the cloud business alone is worth $1 trillion, given the opportunity of that $25 billion run rate. So I think what's starting to happen now, it's a new paradigm for tech re-rating, and the haters will hate. But I continue to think the path is up and to the right for tech.
Well, the stocks are lagging this morning. Amazon down by 9/10, Alphabet off by 1/3, Facebook off by 1/10. Not big moves, but big tech falling back just a little bit. Dan, Ives, final question for you. You and I always talk about these secular tailwinds. Can we talk about cyclical headwinds that haven't shown up in some of these businesses yet? I'm going to read you a quote from Mike Wilson over at Morgan Stanley, who said, given the inherent cyclicality of technology spending, we think there is more earnings risk for the tech sector relative to other cyclical sectors that have already experienced the typical recessionary reductions. Can you draw that distinction name to name? Who is more vulnerable exposed to the cyclical headwinds we're about to experience in the back half of this year?
Well, especially enterprise-focused names are ones that are more exposed. I mean, some of the consumer plays. But, look, the one thing where I'd point a bit of a disagreement with that is that the secular tailwinds we are seeing in cloud, e-commerce, cloud, across the board are some of the strongest ones we've seen in 20 years. And I think that is right now overshadowing some of the cyclicality, and I think that's going to continue. That's why right now to bet against tech is getting in front of a freight train here.